Hello and welcome back to InfoAU1, your trusted channel for the latest updates on Australia's immigration, pension, and policy changes. Today's topic is one of the most important of the year, especially for older Australians. From this month, Centrelink's 2025 pension rule changes are officially in effect. These updates are more than just minor adjustments. They affect payment rates, eligibility requirements, income and assets thresholds, and even the way supplements are calculated. For hundreds of thousands of Australians, these changes will mean higher support, but for some, they may result in reduced payments. Over the next 40 minutes, we'll carefully break down what exactly has changed in the age pension rules, the new payment rates for singles and couples, adjustments to the income and assets tests, how residency requirements are being tightened, the government's reasoning and economic background, the impact on pensioners, families, and future retirees, and finally, some practical steps you can take to adapt to the new system. By the end of this video, you'll have a complete understanding of the 2025 pension landscape and how it affects you or your loved ones. Before diving into the changes, let's take a step back and look at how the pension system currently works. What is Centrelink? Centrelink, run by Services Australia, is responsible for delivering payments to Australians in need, from job seekers to carers, from students to retirees. Among its most significant programs is the age pension, which provides a regular income to Australians who are past retirement age and meet residency and financial requirements. For many older Australians, the age pension isn't just extra money, it's their lifeline. With living costs on the rise, especially housing, utilities, and groceries, pension payments often determine whether seniors can live with comfort or face constant financial stress. Who qualifies for the age pension? The age pension is not automatic. To qualify, you must reach pension age. As of 2025, this is 67 years old. Meet residency rules. You need to have lived in Australia for at least 10 years, with at least 5 of those years continuous. Pass the income test. Centrelink looks at what you earn from other sources. The more income you have, the smaller your pension. Pass the assets test. Your property, savings, and investments also affect your eligibility. Be an Australian citizen or permanent resident at the time of application. How payments are calculated. Centrelink applies both an income test and an assets test. Whichever test results in a lower payment is the one used. Payments are made fortnightly, and the amount depends on whether you are single, higher rate. Part of a couple, slightly lower individual rate, but higher combined total. Twice a year, in March and September, pensions are indexed, meaning payment rates are adjusted to reflect cost of living and wage growth. This ensures that pensions don't lose their value as inflation rises. Now, let's move to the heart of today's video, the new rules that came into effect this month, in 2025. These changes cover 5 major areas: payment rate increases, income test adjustments, assets test changes, residency and eligibility rules supplement updates. 1. Payment rate increases. The most welcome change is an increase in the base pension rate. Single pensioners will now receive an extra $55 per fortnight, bringing the maximum full single pension, including supplements, to around $1,120 per fortnight. Couples, combined, will see an increase of about $84 per fortnight, lifting the maximum combined payment to around $1,690 per fortnight. This change was introduced to help offset rising living costs, particularly with housing and electricity prices at record highs. For seniors who rely solely on the pension, this increase will bring some much-needed relief. 2. Income test adjustments. The income-free area, the amount of money you can earn before your pension is reduced, has been lifted. For singles, it rises from about $204 per fortnight to $230 per fortnight. For couples combined, it rises from $360 per fortnight to $405 per fortnight. This means pensioners can now earn a little more through part-time work, casual jobs, or investments without losing pension money. However, once income passes the free area, the taper rate remains unchanged. For every dollar above the threshold, your pension is reduced by 50 cents. This reflects the government's policy to encourage older Australians to keep working part-time if they wish, without being penalized too heavily. 3. Assets test changes the assets thresholds. The maximum value of assets you can own before your pension is reduced have also been raised. For homeowners, single the cutoff rises to about $310,000. For homeowners, couples the cutoff rises to about $465,000. For non-homeowners, the thresholds are higher to reflect housing costs. This means people with modest investments or savings won't be penalized as quickly as before. However, the taper rate, the rate at which your pension decreases once you exceed the threshold, remains at $3 per fortnight for every $1,000 over. 4. Residency and eligibility rules. This is where the changes get stricter. Minimum residency requirement. The government has increased the requirement from 10 years to 15 years for new applicants, unless they have worked in Australia for at least 5 years. This means new migrants will have to wait longer before they can claim the age pension. This change was introduced as part of a cost control measure and to ensure that long-term residents benefit more than recent arrivals. 5. Supplement updates. The pension supplement and energy supplement are still in place, but the way they're calculated has shifted slightly. Supplements will now be tied more closely to energy price indexes and inflation data. This means when power bills rise, supplements are more likely to rise automatically as well. This is designed to keep pensions more responsive to real-world costs. So, why has the government made these changes in 2025? There are 3 main reasons. Cost of living pressures. Inflation has made essentials more expensive. The pension increases are meant to ease this pressure. Encouraging work participation. By raising the income-free area, the government wants older Australians to stay active in the workforce if they can. This helps fill labour shortages and reduces pressure on the budget. Budget sustainability. With an ageing population, pension costs are rising. Stricter residency rules help control long-term spending and ensure pensions primarily support those who have contributed to Australia for many years. In short, these reforms are about balance, providing relief where it's most needed, while keeping the system financially sustainable. Current pensioners with modest income or assets will benefit most from the increases. Pensioners who work part-time can now earn a little more without losing benefits. Those struggling with rising bills will benefit from the more responsive supplements. Who misses out? New migrants face longer waits before being eligible. Pensioners with larger assets will still face reductions under the test. Those on the borderline of thresholds may see only small increases. It's a mixed picture, depending on your personal financial and residency situation. If you're already on the pension, or planning to apply soon, here's what you should do. Check your payment rate. Use Centrelink's online calculator to see how the changes affect you. Review your income and assets. If you're close to the thresholds, small changes can make a big difference. Consider part-time work. With higher free areas, working a few hours might boost your overall income. Plan ahead if you're a new migrant. Factor in the longer residency requirement. Seek financial advice. A professional advisor can help you make the most of your entitlements. The pension changes also have wider impacts. They reduce pressure on the welfare budget. They encourage older Australians to stay engaged in the workforce. They reshape migration and residency expectations. They may even reduce poverty rates among seniors, especially singles. In the long run, these policies are part of Australia's effort to balance economic growth with social security sustainability. To wrap up, the 2025 Centrelink pension rule changes are now in place. They bring higher payments, more flexibility for part-time work, and updated supplements, but also stricter residency rules. For many pensioners, these updates will provide relief at a time when it's badly needed. For others, especially new migrants, the rules will feel tougher. At the end of the day, the pension remains one of Australia's most important safety nets, and staying informed about the rules ensures you can plan your future with confidence. If you found this video helpful, don't forget to like, share, and subscribe to InfoAU1 for more updates on pensions, visas, and government policies. Thank you for watching, and we'll see you in the next update.